Yesterday, the macro was full of. This morning, something changed. Bitcoin is trading around 71,000 and the IVT Terminal still reached bullish. But the Cantillon Flow, the 3-layer institutional capital sequence, just rotated from full risk off to speculative. One single layer flipped green overnight. The rotation is either the first real signal of a regime change or the most dangerous false start of the entire cycle. So today I'm going to show you exactly how to tell the difference. Class is in session. Now, let me show you the exact shift. Yesterday, the Cantillon Flow we see here had 3 red crosses, which meant full risk off. All 3 layers were red. The macro bonus was at -7. The framework was crystal clear. Upstream condition for sustained institutional buying was simply not there. Today, Cantillon Flow is speculative. Liquidity and equities layers remain red, but the risk assets layer, the one Bitcoin lives in, it flipped green. The macro bonus, it has improved to -5. So here's the question serious traders must ask right now. Is this a genuine regime rotation or just a single layer blip that reverses in the next 48 hours? Speculative is the most ambiguous state in the entire Cantillon framework. It means risk assets are moving independently of the broader macro foundation. That can happen in 2 very different ways. Early cycle accumulation where risk leads, or a leverage retail relief rally that institutions use to distribute. The only way to tell them apart is with the volume structure. And that's exactly what we are going to read next. For new viewers, here's why the order of layers is everything. Institutional capital doesn't jump straight into Bitcoin. It follows a sequence. Liquidity improves, which means Fed balance sheet, credit spreads, bond behavior, and that capital flows into equities. Only then does excess risk appetite spill downstream into high beta risk assets like crypto. And Bitcoin sits at the end of that chain. It's usually the last to receive institutional flow and the first to lose it. And today we have layer 3 risk assets turning green, while layer 1 and 2 stay red. That's an out of sequence move. An out of sequence move, they aren't automatically bearish. Sometimes risk assets genuinely lead the start of a new cycle, but most of the time they don't. The volume structure is what confirms or denies the move. So let's look at it right now. We have 5 readings that matter most today. The first one is the POC. It's the red horizontal line you see here at 68,000. That's the point of control. That's the price level with the highest institutional volume. And this is of course on the 4-hour chart. Price, it retested it and held. So that's structurally positive. It means supply at that level was at least partially absorbed. We still have the stability is 0 out of 2. Despite the POC hold, stability is still 0. This is our accumulation detector. 0 means no institutional base has fully formed yet. We have a potential floor, but not yet a confirmed foundation. And then we have the volume compression. The volume compression yesterday was 61%. Today, it dropped to 54%. That small contraction is directionally encouraging. The market is starting to release energy from the recent bounce. It's not coiled yet, but it's moving in the right direction. Sustained moves need compression first. Then we have the purple zone, which is right now a supply zone that we are heading towards. It has a major volume node. Price is sitting just below it right now, and any push higher will hit institutional selling pressure. A clean break of this and hold above 72,500 will be significant. A rejection here, especially on weak volume, would just confirm that this is a distribution. we have the AVWAP. The AVWAP is the most important measurement on this chart. As you can see here, it's gray now, which means speculative, but it is rising slowly on the 4-hour chart. And this is very important. We need AVWAP to keep rising while price also goes up. So those 5 readings together paint an honest picture. Potential is building, but confirmation is not here yet. So speculative does not mean buy. It does not mean sell. It means the framework is watching carefully. In the full Cantillon sequence, we move full risk off to accumulation to early cycle and full risk on. And speculative, it sits outside that line. It flags when risk assets are moving on their own while the upstream macro remains weak. But the encouraging part here, the macro bonus, it just jumped from -7 to -1 in one session. The rate of deterioration is slowing. So here's the practical difference. Full risk off, stay out. Speculative, define your triggers in advance. See it as a yellow light. The job now is not to predict the outcome. It's to know exactly what you'll do if the structure confirms or if it deteriorates. So the realistic scenarios, these are not predictions. These are just the framework in action. Price breaks and closes above 72,500 on strong volume. Compression continues towards the coiled. Stability moves from 0 towards 2. Equity layers, layer 2, starts turning neutral or green. And AVWAP keeps moving up with price. If this sequence plays out, the speculative state is resolving bullishly. An entry above 72,000, risk down at 68,000 on POC, initial target the AVWAP zone. So if this sequence plays out, and I am already long BTC from the 23rd, you can see my trades on Substack, where I posted this trade with a stop below the POC. If it stays above the AVWAP, I am looking for a move up towards the 75 again. That is scenario A that I am watching right now. The scenario B could be that the support holds, that supply zone holds, distribution resumes. So a rejection of this area on weak or heavy sell volume, and risk layers flip back to red and becomes full risk off again. And the stability, it stays 0 out of 2. Then we only have the POC as the line in the sand. Scenario 3 can be a sideways compression. Often that is the highest probability setup. Price coils between 68,000 and 72.5, and we will see several sessions of mean reverting. If that happens, we will see volume slowly compresses. Stability will gradually build, and the AVWAP will start flattening out. And most traders, they hate boring price action, but this is frequently the highest quality setup. The market quietly building the foundation for a sustainable move. To the retail trader who's watching this, the bullish bias and speculative shift are real, but they are not a green light to go all in. So when there is a speculative regime like now, my BTC trade is only 25% of what I usually trade. So I'll wait for more confirmation before I put more money into the trade. Speculative means that the environment has improved enough to watch it closely and to be surgical with your trading. So I would use the 68 POC as a risk level if you take a control upside exposure. To the serious investor or allocator, a composite of -6 with 2 layers still red is not a regime you should size heavily into. The macro bonus improvement is the most positive data point. It shows deterioration is slowing. So watch for it to cross into positive territory, plus layer 2 turning green. Regime first, volume second, and price last. The regime is transitioning. The volume hasn't fully confirmed it yet. And price is sitting exactly where it should while the market decides. So every reading you saw today, the Cantillon rotation, the exact levels, the if-then triggers, updates every single morning before the US Open. Paid subscribers to the Cantillon report receive this fully daily brief with precise AVWAP reclaim levels, confluence scores, position management rules, and the complete IVT terminal on TradingView. If this structured institutional grade approach is how you want to read every trading day, head to the cantillonresearch.com. The link will be in the description. Subscribe and like this video. It really helps me a lot. And drop your biggest takeaway or questions if you have comments below here. I read every single one of them. Class dismissed. Trade safe. Bye bye.